We're back. Welcome back. In this video, we're going to be talking about social sentiment and analyst recommendations. We are going to be using Financial Modeling Prep's API that is going to enable us to query some historical analyst recommendations for large cap tickers in tandem with the StockTwits social sentiment. So if you would like to follow along with the code, I have an article I will link in the description of this video. If you're interested in Financial Modeling Prep's FMP's API, I will also leave a link in the description of this video. You're going to have to replace the API key variable in the code that you find in my articles with your own API key, because I'm not going to give you mine. All right. So what I do here is I construct in this initial cell two functions, one to get the analyst recommendations and put them in an appropriate format, and I do the same for historical sentiment. Now, one thing to go ahead and note here is these functions, what I would like to do is make them a part of my QFIN module. FMP's API has a whole bunch of handy resources and data. Namely, historical sentiment, that's the primary area of my research, but they have pretty much everything. They have institutional ownership, executive compensation, just a ton, a massive amount of data. So highly recommend you go ahead and check them out. I'm going to be doing a whole bunch of videos like these, investigating social sentiment and the relationship between social sentiment and a lot of these different types of variables. Maybe we'll do deeper analysis in the future. Maybe it'll turn into a full-blown publication. If you're interested in some of my other articles, you can go ahead and check out my author profile. I can also leave that in the description below. Those are more formal academic articles based on social sentiment. All right, so that's a shameless plug there. Nevertheless, let's just go ahead and talk about this relationship between analyst recommendations and social sentiment. All right, so this function here, get analyst recs, what it's going to do is it's going to take a symbol and it's going to use FMP's API endpoint to query, you guessed it, analyst stock recommendations. What I'm going to do is I'm going to create two, or technically three, new features. I'm going to aggregate the buy and strong buy ratings and the sell and strong sell ratings into buy and sell features. Okay, so really I'm not looking, and I don't really care too much about the difference between a strong buy and a buy or a strong sell and a sell. I just want to know, is it a buy or a sell? Okay. Should we look at a more granular level into this, spread? Maybe we should look at the strong buy versus strong sell. We probably should, but for the simplicity of this analysis, I'm just going to look at the aggregate buy and aggregate sell, and I'm going to construct a spread that I deem the difference between the total buys and the total sells. Okay, simple enough. So this is going to be positive if there are more buys, and if it is negative, then there are more sells, right? That's not exactly rocket science. And then I'm going to go ahead and convert the date variable to a pandas date time variable so I can merge it with the historic social sentiment. So that's going to do it for the get analyst recs function. The get historic sentiment function, this is exactly the same function that we used in the last video. It's the exact same function that we used in my article. So if you've seen it before, you should know exactly what's going on here. But really, it's just going to take a ticker, and it's going to take a certain number of pages. That's essentially how far back we should go to look for sentiment. And then it's going to construct a data frame for the particular ticker, and it's going to return it with a date timestamp extracted from the timestamp, and that's going to allow us to merge other data on the day. Okay, what do I mean by that? Well, the timestamp variable is very granular. That is, it goes to the hour of the publication of the social sentiment, right? Because we can have social sentiment on the hour, essentially, right? We can just look at the aggregate number of StockTwits or StockTweets, whatever you want to call them, the messages on StockTweets every hour, and construct a new sentiment. So we have a very granular measure of social sentiment, but analyst recommendations are not that granular, right? They're published on the day. All right, now before I get a whole bunch of angry comments that analyst recommendations are published daily. I did not say that. I said that the date is the day rather is about the granularity of the timestamp for the particular analyst recommendations. Okay, so when I say that the timestamp for the analyst recommendations is daily, I don't mean that the frequency of the publication is daily. Okay, the keyboard warriors can go home now. The date, okay, the granularity of the timestamp is daily. All right, we don't have the hour. We don't have the hour. It's not monthly. All right, that's the frequency, but the timestamp is a daily granularity. Okay, so we're just essentially constructing the same timestamp daily so that we can merge the two together. Okay, so both of these functions are going to return data frames, one for analyst recommendations, one for historic social sentiment, and merging them together is going to be easy now because we have them at the same type of time, right? We're just merging them on the day. Now, this is really more of a measure of the response in social sentiment because we're aggregating the social sentiment on the day of the analyst recommendation publication. So you can think of this as like analyst recs get published. We're looking at the response before and after of social sentiment to see maybe if there's a relationship between the spread in the analyst recommendations and the historic social sentiment during that particular time period. Now, we could do a whole bunch of different types of analysis here. We could do some sort of like regression discontinuity situation where maybe we look at cumulative abnormal social sentiment after the publication and then do some sort of like regression discontinuity situation. We could do that to kind of do some sort of causal analysis to see if analyst recs affect social sentiment. Maybe we want to look at the social sentiment a week or a month before in aggregate. So we take the mean social sentiment leading up to the analyst recommendation to see if it informs it. So there are a bunch of different ways we could do this analysis, right? We could look at the impact of the analyst recs on social sentiment. We could look at the impact of social sentiment on analyst recs. Here we're kind of doing a blend of both. So we're looking at the contemporaneous response and social sentiment for the given analyst recs. All right. We're going to do this for an arbitrary set of large cap tickers. This is very similar to the last video on my contemporaneous trading signal. We got a whole bunch of different industries here: tech, healthcare, consumer discretionary, energy, financial services, whatever. These are just an arbitrary set of large cap tickers. Okay, this is just for the simplicity of the analysis to get you up and going with FMP's API, so that we can do a pretty, moderately intricate analysis without going all in. All right. Really, if you want to do some sort of scientific study, then you would want to use a larger equity universe, probably the R3000, S&P 500. You get the picture. But in this case, this will do. So what I'm going to do then after that, so I declare this set of large cap tickers. I'm going to use my getAnalystRecs function. Okay, so I'm going to construct a list of data frames. So I'm going to construct this list right here. I'm going to do dfs.append getAnalystRecs for each ticker in this particular list. So essentially what I'm doing is I'm saying, hey, Apple, get the analyst recs for Apple, take that data frame and append it to this list. All right, and I'm going to do that for every single ticker in this list. So I'll run this. Scroll on down here. Now we get a pooled data frame of the analyst recommendations. Again, the granularity of the timestamp is on the daily level. The frequency of publication is on the monthly level. All right, we can see that very clearly, 8, 9, 10, 11, 12, right? But the timestamp itself is on the daily level. We don't see hours and minutes here. Okay. So we're going to merge on social sentiment, and that's why we constructed a date field in the historical social sentiment data frame. That's exactly what we did right here. Okay, so we're going to be able to merge on date. So we're going to be able to find the contemporaneous analyst recommendations for the contemporaneous social sentiment. Of course, when I say contemporary in this context, I'm talking about back then. So that the analysis is done at the appropriate time. All right, cool. And if you go all the way to the right here, you can see our buy, sell, and spread features that we added. All right. Next, we got to query some historic social sentiment. So I'm going to do literally the exact same thing that I just did with analyst recommendations with all the large cap tickers. I'm going to use 100 pages of historical sentiment, and I am not interested in rerunning this query. It's going to take a hot second, so I'm just going to go ahead and use the saved data frame that I already have. So I'm just going to go ahead and load that in right here. And then I'm going to do a group by mean. This is the exact same thing we did in the trading signal video. So if you didn't watch that video, go watch that video. All right, and then come back here. If you're still here and you didn't watch it, then I'll just explain it to you really quickly. You're welcome. So date and symbol, we want to aggregate the social sentiment by a particular day for a particular symbol. What that means is all of Apple's social sentiment in a particular day is going to be averaged. We specify that we want to do an average by the symbol, not just the day, because if we said just the day, then we're going to be aggregating all of the sentiment. So Apple sentiment, Google sentiment, Facebook sentiment, Meta sentiment, and we don't want that. We want to do it on a date and a symbol level. Okay, so that's what we're doing here. And then if we go ahead and we run this guy, you see we get a concatenated data frame, and that is going to be a pooled data frame of all of our symbols by date. Again, this is of a daily timestamp granularity. And then if we go all the way over here, you can see this is a more granular timestamp that we converted into the daily timestamp over here. But we do have our social sentiment, right, on the particular day, averaged across all of these more granular measures. Okay. So hopefully that's clear. If it's not, go read my article, go watch my other video, or leave a hasty comment, and I'm happy to get back to you. Now what we're going to do is we're going to merge on the daily timestamp and the symbol. So I'm going to go ahead and do a pd.merge those two on date and symbol. And what this is going to do is this is going to join the previous analyst recommendations data frame with the data frame for the social sentiment. If we take a look at the head of this data frame, we're only interested in these 4 features, which we are only interested in. Then we get the analyst recommendation spread as defined by myself. We take a look at the StockTwits social sentiment, the symbol, and the date. And now we can actually do some basic visualizations, all right? Now, what are the implications of this? Why do we even care at all about analyst recommendations? Well, analyst recommendations have been studied to death, right? Because they're just such a prevalent feature in the finance industry. There's no shortage of papers, good and bad, about the price impact of analyst recommendations. So in the context of social sentiment, what can this inform? How does this help us? Well, let's take a look at a social sentiment trading strategy, particularly an algorithmic social sentiment trading strategy. So let's consider that we go ahead and take a sample of social sentiment right before the market opens. This is how we trade social sentiment or social sentiment trading strategy. We take a sample, boom, for the previous day, okay? So it's 9:20. I take the previous 24 hours of social sentiment from my Russell 3000, and then I bucket them into quantiles, and I go long the top bucket, short the bottom bucket, okay? What could these analyst recommendations help us inform? Well, they could help us inform some interesting trading decisions. Maybe we could decrease portfolio turnover. So maybe we have a positive spread, and price impact is going to be overwhelmingly positive because, generally speaking, when analyst recommendations are good, then there's a positive price impact, right? Maybe the same goes for negative price, right, if the ratings are particularly bad. I don't know. This is purely speculation, but I'm just sharing with you how this could be useful. So if we know that price impact should be positive and we're getting a strong positive social sentiment signal, then maybe we're going to hang on to that a little longer. And then maybe we don't have to liquidate that from our portfolio and then purchase a whole new set of equities 3 days later, 5 days later, whatever it is. Maybe it's a weekly strategy, bi-weekly, who knows, whatever. It's just going to be based on the strat that you're running, based on the social sentiment that you're using. That's one example. Maybe the social sentiment does not align with the analyst recommendations. That's another case. Maybe you don't enter into a position in a particular equity if they don't align. Maybe you exit early. Who knows? Those are other options as well. This is all grounds for future research, right? But that's how it can help inform our social sentiment trading strategies. Okay, so this is not just for kicks analysis. This is actually getting you set up to do these deeper sorts of analysis. Okay, because once you merge these guys together, the only thing that you have to change is how you're merging the social sentiment right here. Right, we're doing a group by mean on a date level, but why not do this on an hourly level? Right, you can do this however you like to do it. And then maybe you do it on a weekly level, and then you do a lag and you merge this on a lag with the analyst recommendations, and you see if that informs that, and whatever, blah, blah, blah. There's literally an infinite number of things we could do, and an infinite number of ways we could analyze this problem space. But these are all just examples. So this could help us inform portfolio turnover, early exit, or lack of entry. So let's just consider that, and we'll move on to the next section, that is visualizing the spread as a function of social sentiment. So go ahead and run this guy here. And we get a pretty interesting looking chart, all right? What we see here is very reminiscent of the chart that we saw with social sentiment and stock returns. That is, in sentiment neutrality, that is when there's some uncertainty, around 0.5, right? We see that the spread is both very large and very small in the analyst recommendations. Now, outside of that neutrality, you see this sort of like positive linear trend, right? Like, I'm pretty sure I could pluck an AP stats student from high school, show them this chart, and be like, hey, draw a line of best fit. And even they would say that the slope is positive, even with no formal understanding of regression. So this right here is relatively indicative of a positive linear relationship between sentiment and analyst recommendations, at least contemporaneously. That is the day of the publication of the analyst recommendations. So for kicks, we can go ahead and do a OLS printout here. So I'm just going to use stats models. I'll run this guy, and lo and behold, we get a positive and statistically significant T-stat, and that kind of just matches what we would expect drawing a line of best fit through that guy. And then right here, I'm just going to go ahead and actually draw the line of best fit. So we'll take the coefficient. It's about 32, and then the coefficient on the social sentiment is about 32, and then the intercept is about 6. So I'll run that, and then I get my positive line through this data. So that would be the line of best fit. So we would say that maybe not strong, because the R-squared value is particularly low, the correlation coefficient is particularly low. So we'd say that there is some sort of positive linear relationship, weak, moderate, whatever you want to say, linear relationship, positive linear relationship, between StockTwits sentiment and analyst rating spread. Okay, so where do we go from here? Where should we go? Well, a couple of different places, right? There's a couple of different things we could do. So we could take a look at the subsequent impact of analyst recommendations on price, right? This has been studied to death. This is nothing that's particularly new, but that could help us inform our decisions, all right? If we find that analyst recommendations are going to greatly impact price in the near term once they're published, then perhaps what we would like to do is take a look at the social sentiment leading up to the analyst recommendations at a daily, weekly, and monthly lag, and we could see which one best predicts the spread. And if we find a reasonable predictor of spread, then perhaps we can inform the analyst recommendations before they come out, and then make positive decisions in terms of at least P&L in our strategies based on the impact of social sentiment on the recommendations. So if social sentiment is particularly positive leading up to it, and we know that positive sentiment's indicative of a positive spread, and then that's indicative of positive price action, then we can go ahead and build that into our system accordingly. So that would help us decrease portfolio turnover. Moreover, if on the flip side we see things like, let's say the social sentiment doesn't agree with the recommendation, So even though we're trying to inform the recommendation, the decision, let's say that the sentiment does not agree with the recommendation, right? What are the implications of that? Does return tend to be positive or negative? Does it align with social sentiment? Does it align with the analyst recommendations? Right? That's grounds for research, because that's going to inform whether or not perhaps you shouldn't even enter a trade, even if it's in the top or bottom bucket of your social sentiment quantile breakdown. So these are all just a whole bunch of different places we could go with it, and it's pretty cool that FMP's API gives us access to this sort of data so we can ask these kinds of questions. All right, well, that's going to do it for this video. I hope you enjoyed it. If you have any questions, comments, or would like to throw some shade, you can feel free to do so in the comments below. Buy my courses, go to quantkill.com, help me out. Check out FMP's API, check out my article. Shoot me an email, roman@quantkill.com, if you have any questions. Other than that, I will see you in the next one.